Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey MJ traders and investors, we're looking at the sector here, a whole bunch of names we're going to go over. Another very weak day in the market. Some names were impressive with how they held up, with the market dropping over 2% today on the S&P 500 and seeing CGC not even break the low of yesterday. That's notable that the bulls held up really well in some instances, all things considered. Again, at this point, if you are active in this market and you only care about the MJ space, you still have to be aware of what's going on with Trump and China. It has a significant impact as far as the trade deal goes as to what we're expecting day after day, day in and day out on these tickers. So if we were looking at bullish news and the trade deal going through, we'd be looking at bull breaks and moves up towards recent highs, in my opinion. And because we're seeing the opposite and some bearish action, the market is pulling back significantly, trying to form a weekly higher low on the S&P 500, and we're seeing it affect the sector here. So CGC is a daily inside bar. $47 is the level that the bulls really want to hold. We still have this pattern. Every day is a lower high 5 days in a row. We have to break that pattern for the bulls to be confident that our higher low of $47 is going to hold. If that level breaks tomorrow, we're then looking down at $46.64 and then a lack of support. The bulls really want to hold $47. It gives the potential for continuation eventually. The further we drop back and the further we get from the resistance level where we topped out, the longer it's going to take to get back to those levels. So the weekly consolidation on the S&P 500 is going to indicate a whole lot as far as what we're expecting this summer. So CGC, for the bulls to turn around this momentum, anything under 48.38 is just an hourly lower high. It was a bear flag with increased bear volume. Look at the volume profile today. Bear volume on the way down, decreasing bull volume on the bounce attempt, increasing bear volume on the way down. Very notable. There was very high volume in the market at the end of the day in the last 20 minutes, and checking in on CGC, it saw that same kind of volume pattern, but it didn't do a whole lot to moving the price. So essentially, it's just an inside bar. Break 47. We haven't found our daily higher low yet. And if the bulls can break the lower high everyday pattern of 48.88, our higher low is established. The bears have favor because of where we closed. Been talking about the CRON weekly bear flag for quite some time now, the last few weeks, and it just confirmed today. We dropped down to a lower low, confirming the bear flag. Look at the lack of any weekly support nearby. Daily time frame. Clear bear break. Our new daily resistance level is 1767. We can say anything under that is just a daily lower high. And now the next support level we're looking at, 15 psychological and 1409 are the next two clear levels that stand out to me. And the bears are still in complete control for CRON. We certainly were not getting fooled by this bounce. There was a lack of conviction by the bulls, who couldn't even put together 2 green days in a row. It went green, red, green, red, green, red, green, red, green, red, and then the bear break. And of course, the bear break is due to the market weakness, and that setup favored the bears. So they were just waiting for their opportunity, and they got it. Just like APHA, the setup favors the bears. So any market day with weakness, the bears have a very easy time of dropping to lower lows. We broke the lower low by 5 pennies, not a convincing break, but we also closed weak. And again, there's just no support nearby here. Next support level we're looking at is 670 gap filled. So that 670 gap has now filled. That's a little bit notable. But 624 is the next level. And every day for the last bunch of days in a row, 5 days in a row with a lower high every day. Bulls have to break that pattern. ACB, huge dip buying yesterday. Zero follow through today. Bit of an easy short just with the weakness first thing. Top fishing the high of the day. If entering bearish, you would stop out if 894 were to break. But seeing the market set up, and if you go through and look at what the entire market was doing, daily inside bars were very likely in a lot of names, and it ended up being the case for ACB. So from here, we have a tightening range where we have the low of the dump, the high of the bounce is 894, and now we're looking for a higher low compared to 815. And looking at it on the 4-hour time frame, a bit more condensed, bulls are going to hope that this is an inverse head and shoulders pattern with the left shoulder. This would be the head. This would be our right shoulder. Bulls would have to turn around and break 894 and 896 to confirm this reversal pattern. But first things first, bulls need to find a 4-hour high or low and try and make their way back up towards those resistances. OGI has not formed its daily high or low yet. Every day a lower high 4 days in a row. No follow through on a bounce attempt. Still scouting. We need an hourly trend change. We had this attempt at an hourly trend change, but we only broke resistance by 2 pennies and saw no follow through. So I can say that anything under 966 and 967 is just an hourly lower high, and we need a clear trend change. And actually, this was a little bit of a trend change as well. But on the daily time frame, the most important pattern for me is the lower high everyday pattern, because we know it's very clear. If we don't break that pattern, we're just going to set a lower high compared to the previous day, and it's going to keep the bears confident because it's just a dropping benchmark each day. Have to break that pattern. So when I say that the hourly trend needs to change for us to be confident that our high or low is set, notice I don't say the hourly trend needs to change for us to set our daily high or lows, because there are instances where it doesn't trigger it. There are many times, more often than not, that if you change the hourly trend looking for a daily high or low, that's going to be your daily high or low. But there are instances, and OGI is a good example, where we changed the hourly trend here with a little higher low and higher high, and that was not a daily high or low. We did not break the pattern on the daily chart. So just a good example of why we don't speak in definites and why we have rules of thumb that we know are going to work a lot of the time, but not all the time, because nothing works all the time. HEXO still holding its double bottom of 725, the must-hold short-term level, and still forming a lower high every day, 6 days in a row. That means the range is tightening. It's a bit of a descending triangle, and the bulls at this point want to see a break of 764, and 782 is the level, but it's just a tightening range, and we're either going to see a clear bear break of 725 or a bull break tomorrow of 770 to try and change the pattern of a lower high every single day. TRST is a daily bear flag. Have to be cautious. The double top at 824 was a clear rejection point. We ended up pulling back very significantly from that resistance. We rejected from it first thing, and anybody top fishing that resistance level made a lot of gains very quickly, about a 5% pullback, and then it got to more extreme after that. And now what's up to the bulls is they have to recover here, because if we break 750, we drop down to 766. But if we break 750, the daily bear flag is confirmed and another leg down is coming. If the bulls can hold 750 and turn around and break the double top at 824, that's a clear trend change. Here it is on the 4-hour time frame. Have to form the higher low and break the double top to change this momentum convincingly. The first bounce that we saw over the last couple of days was just an impulse oversold bounce, and we have to see follow through over that double top in order to continue filling this gap. We can pretty much say a line in the sand. If we do not break 824, the bears keep control of TRST. VFF, bear close down at the low of the day. We did break to a lower low. Each day we're just breaking support just barely. We broke support yesterday by 4 pennies. We broke support today by 2 pennies. Next level is 1085. If we break 1085, the odds of the weekly bear flag increase a good bit. It's a weak weekly bounce attempt compared to where we came from, and we're now dropping down and breaking daily support levels. So if we break 1085, the only support nearby is 10 psychological and then 981, and anything under 13 is just a lower high, and it looks like we're setting another lower high at 1210. VFF and Curaleaf bulls stood out this morning with their strength, but then as the S&P 500 just faded and dropped all day, those bulls could not hold up against the onslaught of correlation, and they ended up dropping. And for VFF, the clear signal was a change in trend on the 5-minute time frame. Strong start to the day, higher low, lower high, lower low, big red candle on that change of the 5-minute trend. TGOD is tightening up as well. And this one, let's see if we have a good hourly to choppy. So it's just a tightening range where we have our low, we have resistance, again, just lower high every single day, 4 days in a row. We're seeing so many names with that pattern, but we have a base of support trying to hold. Pretty much the same setup as CGC and HEXO, and a bunch of these names have to break the lower high everyday pattern and hold these supports to shift that momentum back in favor of the bulls. Otherwise, if the bears keep up the pattern of a lower high every day, they are comfortable, and we're looking down at the must-hold 414 support. VGW, that's a weak bounce attempt, and remember we were pointing out the caution of the potential head and shoulders pattern. Here's our left shoulder. There's our head. Here's our right shoulder. If we come down and break 386 and 389, this little neckline of support, that is going to be a clear trend change on the daily with this weak bounce attempt for a lower high and then a drop to a lower low. So that's if we break 386. That's a must-hold support level. Otherwise, we zoom out on the weekly and look for further consolidation, perhaps back down to the 12-period exponential, which has held the previous consolidations, but that's down in the mid-$3 range. So very key support for the bulls to maintain, and resistance is 430 and 432. If we can break those levels, that will alleviate the pressure that's on the bulls to defend that support. LABS continues to tighten as well. Lots of tightening ranges out there in these sectors. And again, the fact that these bulls were able to stay in tightening ranges with the market dropping 2% is fairly impressive. It was obviously a red day in most cases, but it wasn't a brutal red day. And a market day like today, we have certainly seen many brutal days in the past. So I would say today is a victory for most MJ bulls. Certainly not for CRON or for names that are free falling, but labs here, the must-hold support is down at 515 and the key resistance is 587. And we're just seeing volume drop off while we trade within this tightening range. We will look for a volume spike and a break of this range sometime before the end of the week with three trading days still to go. 533 is also a support level short term that the bulls would like to maintain, but the more important level for me is the clear base at 514 with that little double bottom. So that's one to keep an eye on because that break is imminent. Curaleaf. So the bulls attempted to try and follow through to the all-time high today. We got fairly close. We got within 4%, actually 3% of that all-time high. And then we pulled back. I was actually going to look to make an entry in Curaleaf this morning because the way the bulls were set up to start the morning, we knew that any SPY bounce, the bulls were going to be favored really well to be looking at that all-time high. Fortunately, Fidelity was having issues and not placing orders. Ended up getting free trades because of that, and it kept me from an entry that probably would have resulted in a small loss. Was going to look to enter in the, let's see, it was about $15 when I tried to place my order. So we would have seen 2% of follow through, but we would have given it all back very quickly. So I'll take the free trades and kept me from a losing trade in MJ. I didn't trade anything in MJ today. I was focused on the volatility in the overall market and trading leveraged ETFs in the biotech sector for the most part today. But for Curaleaf, the bulls want to maintain the daily higher low pattern, and our new support is 1380. So looking at it on the 4-hour time frame, actually I like the hourly, we have the low of 1380, and we did see a little higher low and higher high, but that move faded. I'm still looking for an hourly higher low compared to 1380, and we're going to look to stay within this range for a couple days. So eyes on tomorrow for an hourly higher low compared to 1380, and then we'll look for a bounce and a lower high in the upper $14 range, and I expect this range to tighten up for the next few days at least. CWEB is on the verge of a bear break from its tight range. Support is 24.94 and 24.86, and we dropped down to 24.92 today. If we break 24.86, it's a clear bear break. 24.28 is the next support level nearby, and that will tell us the weekly consolidation is still underway. Just like the daily charts on a lot of these patterns, lower high every single candlestick 5 weeks in a row. We can't be confident that our weekly higher low is established if we're forming lower highs every single week. So break is imminent on CWEB. Bulls really want to defend that support tomorrow because if we don't, there's a lack of clear support immediately nearby. IAN, a little bit of dip buying at the end of the day, but pretty much just watching this 4-day range. And the reason I exited IAN the last 2 days from my entry on Thursday was because, number one, I'm only looking for a lower high. Best case scenario, we're looking in the upper $6 range in this tightening daily trend. Market weakness has had me quicker to pull the trigger on exiting those positions with small profit because I know, number one, IAN is one of the weaker MJ names, one of the weaker US MJ names in a daily downtrend. We have not changed the daily trend back to the bulls anytime recently. Number two, market weakness. So if I'm already having a bearish lean on an individual name and we have market weakness, I don't want to be in a bullish position. And if I'm fortunate enough to have small profit on that position, if I'm against the trend, I'm going to lock it in very quickly. If I'm with the trend, I'm going to let it ride a little bit longer. Not the case for IAN. 609 and 657 are the two ranges to be watching, and we could trade within this tight range for another couple of days before we get some clarity as far as short-term direction goes. Break 609 and it's right down to 591. Break 657 and we're looking right up to 722. OH daily inside bar holding up better than CL. You can see CL broke the low of yesterday, or closed at the low of yesterday, and down at the low of the day is where we closed. So again, I like changing time frames to see more clarity, and the 2-day time frame is very clear. 1416 is the must-hold level for CL, and I do expect the bulls to hold that support level, at least initially. And if we do the same thing on OH to smooth things out a bit, we're looking for a higher low compared to 1077, and looking at the volume drop-off, I would expect the bulls to hold that support initially as well. And this is the kind of scenario where we have to be cautious of the head and shoulders pattern showing a loss of momentum. If we hold 1416, that's great. But if we then top out, can't break the all-time high, and roll over, that's a head and shoulders pattern going from higher lows and higher highs to a lower high and then a lower low. So we do have to be cautious of those patterns on CL and OH using the 2-day chart for some clarity. TRUL, very tight. Bears still have favor. Again, bulls are just struggling to put together 2 green days in a row. It's been 3 weeks since we've seen 2 green days in a row. We can't give the bulls any benefit of the doubt. They have to show us strength, and we have to be honest when they are not doing so, even if it's a position we're in, which is the case for IAN, as far as I'm concerned. So high, low, lower, high. We have support down at 1696 and 1643. The bulls have been unable to get any momentum going. We closed down at the low of the day. And another one where the 2-day time frame is a little bit more clear, and the bulls are just trying to form a higher low compared to 1643, but they're not giving us any indication that that higher low has been established. And we'll wrap it up with KHRN. Gap down, I believe they had shares being offered, so some dilution. Took out support of 298. Big setback, just in the sense that the weekly chart is now dropping back down again. If the bulls want to change this weekly trend, we have to hold 278 and break 375. We are 78 cents away from a resistance break, and we are 21 cents away from make that 19 cents away from a support break. So we're much closer to a support break than a resistance break, and that would just keep up this weekly downtrend and losing a lot of momentum over the last week after a very strong April 29th on high volume, just giving that all back. So not interested in KHRN personally. Maybe a bottom fishing play off of 278, but that would only be if we drop down to 278. Even then, we're not oversold, so I probably don't like that bottom fishing play. So the bottom line is, again, I am pumping the brakes in the sector due to market weakness. I've been waiting for this market weakness just in the sense that we knew the S&P 500 needed weekly consolidation. I wanted to see how the sector is going to react to that weekly consolidation. Pleasantly surprised with how some names are holding up. The names that are holding up are the names in daily uptrends. The names that are not holding up are the names in daily downtrends. TLRY, APHA have been our lead bears, and even CRON to a certain degree, been our lead bears, and they are following through with free fall, no support. Whereas we have names like CGC, OGI, HEXO, Curaleaf, these stronger names in daily uptrends, they're holding support. So it's a very distinct difference. We can separate names into 3 categories: bullish in daily uptrends, bearish in free fall, and then everybody else somewhere in between. So I am sitting on my hands and being very patient and waiting for opportunity to present itself. And I may not trade MJ this week, as I'm going to be traveling tomorrow. Videos will be sparse, I'm sure. Timing will be off, so there'll probably be some days in the next couple days where I don't put out videos. Heading to Colorado. It's going to snow. Going to hike in Rocky Mountain National Park. Going to go to Red Rocks. I'll be back Monday, but I'll check in a couple times before then. Hope you have a good rest of your day. Here's a garden update before we go, and I'll see you all in the near-term future. So we're checking in now. We got the chard going. Eggplant still struggling a bit to get its roots down. And we got some string beans over there. Potatoes exploded. So I held up the potatoes by putting dirt around the base of them so that the potatoes can grow in. That's a summer squash. Cilantro's doing well. Got the basil up. Lots of basil for pesto. And the cucumbers are climbing like mad. I'm going to run them up there, and I've also got too many, so I'm going to run them along the railing as well. And these tendrils they reach out to grab, and you can put them and touch the string, and an hour or two later they'll be wrapped around them. It's pretty astounding how fast they wrap. And the tomatoes are going. I'm gonna have to prune them because they're gonna get crowded in there with 2 to a pot. And if they're too crowded, then that's when the moisture accumulates and the dew in the morning, and that leads to blight, which is a big problem in this area. So the solution is don't let soil, blight's a fungus, so don't let the soil splash up on the leaves, and cut the lower branches once it's big enough so that the lower branches aren't near the soil. And you want it to dry off every morning as soon as possible, hitting the earliest light. Pretty much it's inevitable you're going to get blight. It's just how long until it hits. More cukes. Bigger guys. So trellising them up, the strings, and I got some backup guys that I'll send out this way. And the peas are coming along. So peas are growing up their trellis. I do have some aphids and slugs that I'm dealing with, but strawberries. And these are the winter peas that are climbing up. And spinach. That's the update.